Firstly, on our disclosures. So this presentation contains forward-looking statements, including but not limited to statements regarding future product development, market conditions, adoption, revenue potential, and strategic initiatives. Nothing in this presentation constitutes investment advice, an offer to sell, or a solicitation to buy any tokens or securities. The JTO token is a governance token and does not represent equity, ownership, or a claim on cash flows. Certain information presented is based on third-party data and internal estimates believed to be reliable, but no representation or warranty is made as to its accuracy or completeness. Past performance is not indicative of future results, and all information is provided at the date of this presentation and is subject to change without notice. So welcome everyone, I'm Sam from Blockworks Research, and today we're walking through Jito's Q2 2026 results with Lucas, Jito Lab CEO, and Brian, president of the Jito Foundation. Last quarter, we called Q1 a structural shift quarter, and Q2 continued that strategic momentum. Notably, BAM crossed a third of network stake and a majority of Solana validators by count. The first plugin, Make a Priority, went live, and Jito announced JTX, which has since launched and opened to the public. On to the next slide, and this is the agenda for today. Same shape as last quarter. We start with Q2, scorecard, go through metrics, competitive position, and market backdrop, then revenue, value accrual and treasury, product and ecosystem, and we'll spend the back half, importantly, on JTX and the outlook before Q&A. So let's start with the headline numbers on the next slide. So on the scorecard, Q2 was a product strategy quarter. BAM stake share reached 33% of the network, up from 28%. And by validator count, BAM crossed a majority of all Solana validators in June. Protocol revenue was 1.28 million, down from 2.33, as transaction ordering value pool stayed compressed alongside the wider softness in Solana trading. And JitoSOL closed at 9.85 million, with the DAO treasury closing near 164.7 million, more than double last quarter, mostly on the JTO revaluation. So Lucas, how would you characterize Q2, and what are the one or two things you'd want token holders to take away from the quarter?
Q2 was a combination of two things. One was spending the time and really focusing on the specific details of what's already out there. So we're really focused on making BAM the best block builder. We hit super minority. This shows that validators trust us. And we're just really focused on getting all the small details on what's already shipped right. We're also focused on making new bets and moving fast on new things. We started working on JTX in March. We announced it in May, I believe, and then we shipped it in July. And that's the newest product in our portfolio. We're moving up the stack from infrastructure to the application layer. And yeah, we've always invested in growth during the bear market. We have a very healthy treasury. We're continuing to grow the team, and we're really just accelerating. So if you're anywhere in our area, we're coming after you, and we're gonna win. And we're really just accelerating as fast as possible.
Perfect. And that brings us on to the next slide, a level deeper on the two core metrics. On the right is BAM count. Validated count went from 340 to 378. So a steadier pace than the Q1 sprint, but stake share kept climbing from about 28% to 33%. And BAM's share of total SOL supply moved from 19% to 22%. On the left, JitoSOL, TVL fell to 9.85 million SOL, mostly from redemptions in April, taking JitoSOL share of the liquid staking market from about 20% to 17%. However, since April, supply has been flat to slightly up, and that share is back to around 19%. So firstly, staying on BAM, how do you view the overall progress this quarter, and what are the plans to keep gaining share from here with things like FireBAM opening up the FireDancer set and other developments like these?
Yeah, our progress on BAM has really accelerated this quarter from, I would say, three key things. So the largest thing that we've been focusing on in Q2 and Q3 and the rest of this year is scheduling optimizations. So we completely ripped out our old scheduler inside BAM, the old block builder, and rewrote it from the ground up. This has led to much better performance, much fuller blocks, and just higher rewards. The other main focus for our team is client diversity. So we spent a lot of time on FireBAM, cranked that out, and we just open sourced it a week or two ago. The last point that we've been focusing on is regional expansion. So we want to get into more data centers. We want to spread around the world. We set up BAM nodes in Hong Kong, Lithuania, and Seattle with a variety of data center operators. I would say we're really focused on trust and proving the performance of the system at scale. This is really what got us to where we are today. And for the rest of the year, there's, I would say, probably three focuses. One is improving rewards. So we're working on, for any of the traders that trade on Solana, if you want to send bundles, you have to go through the block engine. We are adding support for bundle submission directly to the BAM nodes themselves. So you get all the privacy, you get to avoid the hop. It will be much higher performance. This will ultimately result in higher rewards for validators and stakers and increased revenue for Jito. We're also starting to work on more decentralization. So starting to bring validators to run the BAM nodes themselves on testnet. And we're looking to have other parties run them on mainnet at the beginning of next year. And then the third point I would just say is just continuing to focus on the rewards performance and adding functionality that we think is valuable to the network that doesn't exist today. So I think the main pathway that will do this is through plugins.
Perfect. And now looking at the other side of the business. So Brian, on JitoSOL, what's your read on the redemptions this quarter? And what brings growth back from here? Is there potentially a role for JTX in putting JitoSOL directly in front of traders?
Those TVL losses that we've seen over the last 9 months are definitely disappointing to me. I would attribute it to two things. First of all is overall kind of retracement in DeFi TVL. And second of all is just capital rotation from some long-term Solana holders that happen to be exposed through JitoSOL. There is a consistent trend we've seen across prior cycles where LST penetration tends to decline in market downturns, and then it more than rebounds for that in kind of market returns and uptrends. And that is certainly something that kind of we would expect here. LSTs are secularly growing on Solana, but they do have volatility around market cycles. And so you also kind of can see it on the chart. The last 3 months, the TVL has been quite stable. And so very optimistic that kind of those initial withdrawals are now completely kind of processed through, and it is uptrend from here. Later in this deck, we'll be talking about a few separate growth initiatives. We are focused a lot on distribution and have two really exciting launches that we made this quarter. And so we are positioning JitoSOL during this environment to be as strong as it can so that we not only reclaim the TVL that was lost over the last 9 months, but we more than exceed that as the market recovers. And so that's the focus on what we can control and growing JitoSOL from here.
Perfect. And I guess digging deeper on the next slide on these two fronts gives us the competitive picture. On the LST slide that we just touched on, JitoSOL held 9.85 million SOL, just behind BNSOL at about 10.2 million, with the Sanctum ecosystem at about 15.9 million in aggregate. On the validated clients, the Jito client family ran about 54% of network stake at the quarter end. That's 33% on BAM plus 21% on Jito normal. And Harmonic is number 2 to this at around 21%, up from 17.5%, recently picking up some big validators. And you also have Rakurai now emerging as material at 9%. So on these dynamics, the first question on validators would be, Harmonic has been the main challenger on the client side this quarter, and metrics indicate that Harmonic rewards are higher than BAM in some cases. So what's the main pitch for BAM given that current advantage?
Yeah, I think that today the Harmonic validators are earning more than BAM. We are investing heavily into increasing the rewards of BAM. I think that this gap is going to continue to close as we make improvements in performance, and then also enabling this direct bundle submission and really getting the performance of that up. And that's really important for certain types of traders and applications. Even with the current environment, we've continued to see the stake grow. So we went from, I think, around 28% to 33%. And that is because validators think that BAM is the best product. We have shipped the Maker Priority plugin. This has directly improved the trading experience for makers on Solana, and it's leading to tighter spreads on Solana. We're going to continue to invest more time in geographic decentralization and then get third parties operating it. I would say our number one focus for BAM is users and applications on Solana. And I think that positions us differently than some of the other block builders and competitors on the network. And so we will continue to push that through the Maker Priority plugin, pre-comps, and other ideas that we're kind of floating around right now that will come up later this year that will launch to make the user experience and the application experience on Solana even better.
Perfect. Yeah, definitely the suite of BAM plugins should be a big driver going forward. And now back to the LST side. So exchange-backed products like BNSOL have now edged just ahead of JitoSOL, as we touched on. So where does JitoSOL's edge sit against that? And how much of the answer is your own exchange distribution with the Coinbase integration now live?
I'll touch on BNSOL first and then get into kind of what we're doing on our own distribution. On BNSOL, it's no surprise that LST has a lot of TVL. It grew pretty quickly. Binance has always been one of the largest stakers on Solana. Historically, it was native stake. Now it's migrated to LST, but I don't think of that as really a competitor to JitoSOL as like a data point. They have 1% of the TVL of JitoSOL in Camino. It's primarily on platform, and whether that is natively staked or LST, it's not in our immediate TAM for where JitoSOL is likely to be adopted. But it does surface a very important point, which is distribution is king for LSTs. A lot of the same dynamics for stablecoins. And so that is something that we are laser focused on and have been working on consistently. Fortunately, we had two major distribution launches over the last quarter. The first one is what you mentioned, Coinbase, one of the leading and most reputable exchanges in the crypto space. And they opted to exclusively use JitoSOL as their Solana LST. The product itself to start is yield-bearing Solana that you can borrow against. And so that means, if you have a Solana balance in Coinbase, but you want to take some fiat out against it, you can now do that powered by JitoSOL. This product that they've had with Bitcoin for a couple of years now has over $2 billion of TVL. It is really, really powerful. And we've seen it already has close to 200K TVL in JitoSOL from it, starting from a base of 0 2 months ago. And so we are really excited about that just being a secularly growing product, as well as working with Coinbase to find other product integrations where those users can get access to the unique benefits of JitoSOL. Second of all is JTX, and high level again. If you look at the biggest stakers on any crypto network, it is exchanges and custodians. That is where the stake lives. We view JTX very similar in that it is where users will have large persistent balances and they will want yield on those balances. So JTX is the perfect place to surface how good of a product JitoSOL is. We expect to integrate it later this year as a first-class staking option exclusively powered by JitoSOL. And so we are hopeful that as JTX continues to grow, this could become the largest source of TVL inflows for JitoSOL. It not only benefits JTX users, but it drives TVL and shows the synergies between the different businesses that JitoSOL has. And so we are laser focused on getting distribution everywhere we can. Solana is getting a ton of new users, and it is a priority. The first and the best staking option they see is JitoSOL.
Perfect. And then taking a step back a bit more towards the bigger picture here, but still touching on those dynamics, the next slide frames headwinds and tailwinds. So last quarter, revenue tracked SOL price down. This quarter, SOL was roughly flat, and the softness wasn't from activity either, but more so that tips halved to 9.9 million, while transaction count held flat at around 1 billion. On the tailwind side, Solana demand is intact. It led all chains in application revenue in May. Institutions Rails widens with the Coda agreement in Korea, the Solana company partnership across Asia Pacific, and the Coinbase integration all landing this quarter. And now JTX adds front-end economics that don't depend on the infrastructure business lines. So stepping back, how do you see Solana's market structure evolving from here? And is JTX the best way for Jito to monetize that progress rather than the current infrastructure business lines?
It's so obvious that Solana is going to win. I am so bullish on this. I get more bullish every day. JTX data shows that executing trades on Solana is much cheaper than centralized exchanges in large size. We have multiple 7-figure and 8-figure trades on JTX already. Solana dominates in-app revenue. It's by far the best network as far as the pace of technical development. 2 weeks ago, we basically doubled block sizes. Now we're going from, I think within the next 24 hours, we'll go from 400 millisecond slots to 350, and we're going to go all the way down to 200 milliseconds. So I can see, like, the future is so clear to me. I see that Solana is going to capture the vast majority of economic activity in crypto. It's going to continue to grow. Increased activity will continue to benefit all of our infrastructure. So BAM, validators, we're continuing to make very large bets on BAM and bringing on more people to that team. And we're kind of in the phase of, like, we're still continuing to bootstrap BAM, but we're also moving towards opportunities that allow us to monetize in other ways. So I would say that the main way that we're doing this is via JTX. The infrastructure is still super important for us. We see a lot of opportunity there, but there's JTX and other even adjacent areas that we've discovered in the past 2 to 3 months that we're going to expand into as well. That we'll share more on later this year, that we think it's going to have a very large impact on Jito and the Solana ecosystem.
Perfect. Now, getting into those numbers you mentioned a bit more on the next slide, Jito generated about 1.28 million in Q2. Epoch fees led at 37%, then Jito tip fees at 22%, withdrawal fees at 21%, and tip router at 20%. So staking linked streams were around 57% of revenue, though that shift is because tip linked revenue contracted faster, not because the staking base grew this quarter. I guess, so the philosophy has always been to build the best products and let the revenue mix follow. With JTX fees now about to enter that mix, how do you see the infrastructure lines growing from here relative to JTX? And will that correspondingly change your shift and focus as a team altogether?
I think Jito revenue should remain distributed. I am extremely excited about the revenue contribution from JTX. If you think about the size of that market, along with the breadth of monetization opportunities, it's enormous, and we're working as hard as we can to capture it with initially, very positive signs that Lucas will talk about later in this presentation. But on the other verticals for infrastructure, we wouldn't be investing as much as we are in BAM and related infrastructure products if we didn't think it would deliver critical value to not only Solana, but also the Jito network. And I mean, people don't really remember this now, but the block engine lost money for a couple years prior to delivering very outsized returns over 18 months. If you think about where we are now, we are bootstrapping a new product in BAM that has, very strong value capture for users and benefits to users, but it's a network downturn where, capacity is less scarce than it was in prior periods and that bootstrapping period. So I think it makes sense for where BAM is in the life cycle. And as Lucas touched on in the prior answer, we are very focused about delivering value from the infrastructure vertical going into 2027. And then lastly, on the third vertical, JitoSOL. JitoSOL has significant upside from here, but it is linear upside. It is linear with TVL, which, as we touched on earlier, hope it continues and actually exceeds where it was previously. It's also linear with SOL price, which I think has a lot of upside. But if you're anchoring in the overall portfolio, JTX Infra can deliver many multiples of what they're contributing today. JitoSOL is just going to be kind of linear growth by both of those components. So overall, it will remain balanced across these verticals, and JitoSOL will remain an anchor. But the biggest upside of what gets Jito to where we want it to be, that has to be from JTX and the infra vertical.
Perfect. And that revenue picture leads us straight into value accrual on the next slide, where the more interesting story is the forward path here. So cumulative burns were flat at 13.48 million JTO, as JIP-31 kept protocol revenue pointed at BAM subsidies through the quarter as guided. Under JIP-37, the BAM subsidy runs at full rate through September 30th, with a mandate for value accrual to resume in Q3. And JIP-38, approved on July 13th, routes to the DAO's JTX revenue share of 80% of JTX revenue into programmatic buybacks and burns for at least a year. So now a hard link between usage and supply reduction. So can you guys walk us through the thinking on JIP-37 and 38 and how do holders should think about value accrual going forward? And I guess internally, how does Jito weigh up buybacks versus growth for a product like JTX?
We've invested a lot of time and energy with our community to demonstrate to them that we have as strong of a commitment to JTO as we possibly can. This quarter was continuing to just enforce and demonstrate that commitment. So as you touched upon, JIP-37 extends the onboarding incentives for BAM during this bootstrapping period. JIP-38 is more of a long-term play. It demonstrates the clear linkage for JTX to JTO value accrual that we already see in motion over the last month, which is programmatic buy and burns. And overall, just the strong linkage where the community can dictate the levers between reinvestment versus value accrual. Overall, 2026 was a year of significant investment in our two new products, BAM and JTX. Both of them are growing well, and we hope that growth compounds in much more significant ways in 2027. But 2027 is also, as we start to approach that, a year where we hope that we can return to more value accrual to JTO token holders as those products can grow organically.
Perfect. And that leads us to treasury on the next slide. So total assets closed at around 165 million, up from around 68 million, though that's almost entirely the JTO price rising, since the majority of it is in JTO. Operating cash was slightly negative, with the BAM subsidy running ahead of revenue by design. And on the token itself, JTO DEX volume rose about 150% to 75 million, in line with the upward price action. So I guess, how do you think about the treasury from here? And is the JTO position strictly a long-term reserve, or will it ever get deployed?
I think of it as a long-term reserve that provides important optionality. So I am personally really proud of Jito DAO. It has been so disciplined on token emissions. We are playing a long-term game, and I know, and the community seems to agree, that token emissions have a cost. And so I think if you look at DAO behavior over the last 2 years, Jito DAO has probably been one of the most thoughtful and disciplined on not spending the JTO sitting in this treasury just because it's there. However, it is important optionality, and we are constantly thinking of strategic endeavors that we can use this reserve to help invest in. Over the last 2.5 years, I haven't seen an opportunity that I think makes a lot of sense. It not only needs to accelerate growth, it needs to accelerate growth in a positive ROI way, which is what is hard, and we've seen a lot of other crypto projects fail on. So to the extent that we see opportunities that seem to meet those criteria, I would love to talk about them with the community and put them up to deploy this capital. But for now, I think it should be thought of primarily as reserve with that optionality. But especially as the Jito product suite continues to evolve, there could be more interesting ways to deploy at least portions of it, because we do view the next 18 months as critical growth periods for the Jito network.
Perfect. And now moving to a bit more forward-looking movements. So moving into strategy on the next slide, where we have a genuine list for the developments in Q2. On the institutional distribution, the Kodo agreement in Korea, the Solana company partnership across Asia Pacific, and the Coinbase integration going live in June. And as we previously touched on, JitoSOL now accepted as collateral in Coinbase's Borrow product. So while VanEck remains pending. On BAM, make a priority into testing on April 29th as the first plugin, giving market makers deterministic top-of-batch execution. And FireBAM opens early onboarding on May 13th extending BAM to frequent dancer operators with mainnet targeted for August. So Lucas, focusing on Maker Priority here, it's the first live test of the plugin model. What did the first few months of testing tell you, and how does the market maker feedback shape what comes next here?
Yeah, we've gotten really good feedback from the Maker Priority plugin. Today, I think a large majority of the prop AMMs are using the Maker Priority plugin for landing their Oracle updates. And the Maker Priority plugin, it lets market makers quote tighter. This ultimately results in better prices for users. And so we see it depends on the prop AMM that's using this in the market, but between 75 to 95% of the Oracle updates are landing via this Maker Priority plugin. It's being used on very competitive pools. So Sol USDC is extremely competitive. It's also being used on long tail pools. I think the early data and feedback is very promising. We're seeing signs that it reduces toxic flow. We also see signs that market makers are quoting tighter during BAM slots. We have played with the fees a little bit. I think our initial fee for using that was a little higher, and we kind of bumped it down to get more people using it, get more people testing it, and trying to gather more data and iterate faster. And yeah, I would say the next thing that we're focusing on is this concept of BAM time, and basically giving market makers more granular time resolution within a slot. And so today, their only time resolution is this 400 millisecond slot time. And we're aiming to give them access to opportunities to see 50 millisecond slice chunks. And so they will be able to quote much tighter and have more advanced trading logic on chain that you would kind of get in a centralized exchange. And so we're going to ship that, and we're going to continue investing in more plugins that make the market maker experience on Solana even better.
Perfect. So touching on spot spreads here, on the next slide is the one that ties the whole quarter together and where users can actually get this best-in-class execution, JTX. So JTX opened its first cohort on July 14th and to the public on July 21st. It's Jito's self-custody trading platform with spot first and perps and prediction markets coming later. The strategic point here, in my opinion, is that Jito now runs both the block construction layer and the trading interface. So BAM's execution can help become JTX product features that standalone front ends will struggle to replicate. The target audience is being built for serious traders with tools like SmartFill for more controlled execution alongside more advanced order types to come. So Lucas, on JTX, it has been live for a couple months now. What have you learned since the launch? And where does the product go from here on the spot side, including any BAM plugins built specifically for JTX?
Yeah, we are super excited about the reception over the last month. We launched a true MVP here. We could have spent 6 months or 9 months trying to get it perfect, but we took a conscious decision in the beginning. Let's get the minimum viable thing out and learn from there. And I think we were able to ship this from like the day that we started it to it going public in 3 months, as opposed to this 6, 9, or 12-month cycle. The velocity of the new features that our engineering team is shipping is just insane. We've seen really good feedback from large traders. I'll share some numbers that I just pulled from our dashboards later in this presentation. But we're seeing really large spot trades happen. We're seeing a significant amount of capital being saved. I just saw a tweet from the JTX account that someone did a $10 million USDC to SOL TWAP over 4 hours, and they saved $4,000 on that execution compared to the best centralized exchange. So we know that people are going to JTX to execute 8-figure trades. This just shows the amount of work that we spend on the advanced orders and how good Solana is at executing trades. There's a lot of improvements to make over the whole JTX experience for the next few months, and we're really focused on that. Our goal is the best user experience and the best trading execution in all of crypto. And we also have some really cool novel ideas that we're working on that we'll release later this year.
And that leads us on to another question about smart fill specifically, a feature I have been using myself recently, since it's front and center of the JTX experience, it seems. Can you walk us through how it works in plain terms and what results you've seen so far, particularly on those larger trades you mentioned?
Yeah, I think it's helpful to set context on why we created this. If you've ever traded large size on a blockchain, sometimes that little warning thing will pop up and it says you have a large price impact. And the goal of Smart Fill is to lower that price impact. So typically, if you want to do lower price impact, you can do like a really long running DCA, or you can, split your order that you want into a bunch of small chunks and just manually click the button, accept, go to your wallet, hit accept, wait a few seconds, do it again and again. And so we wanted to combine the best features of the TWAP and the speed and one-click functionality of market orders. So you can kind of think of it between this like TWAP and market order. And so basically SmartFill lets you execute many trades quickly by slicing the order into tiny fragments. And what this does is especially true for assets that trade on centralized exchanges, is it gives the liquidity pools time to rebalance from arbitrage. So this can be on-chain arbitrage. Maybe the router wasn't the most efficient, or maybe the price on-chain starts to get pushed up, and you have these arbitragers come in that go on Binance and Coinbase and other exchanges and equal the price out. And so basically, one click, you get the best fill that we can offer. You can move size quickly doing this. We've seen multiple 7-figure orders using SmartFill. And then we're also seeing a lot of people use it on meme coins too. It's definitely the highest and most fee generating order type that we have by far. And we've been really impressed with the uptick. We were kind of just like ideating this before we announced JTX. And like, I've been super impressed and happy with how much adoption this has gotten. The advanced orders like SmartFill and TWAP, they dominate our volume. They dominate in fees. We're going to continue to leverage our Solana experience throughout the stack, from this like base validator layer to the on-chain programs, transaction sending, routing, all this stuff, and offer an experience that you can't get anywhere else. And we're going to beat centralized exchanges.
Perfect. And now onto the outlook on the next slide. And the Q3 catalysts you can see on the slide include, as mentioned, JTX rollout and upcoming expansion into perps, the broader institutionalization of Solana, the September 30th subsidy roll-off, VanEck, and the Coinbase scaling. So I guess the first question on these developments is that firstly, on any read on the VanEck JitoSOL ETF timing, and more broadly, what are the distribution aims for JitoSOL from here?
It's a super interesting time for regulatory in the US in general. Unfortunately, the Clarity Bill did not pass this month, as we were all expecting and hoping it would. But what we've seen as the response to that is that the SEC has gotten more proactive in rulemaking. There was a lot of news yesterday about kind of tokenized securities, and that sort of thing is really critical for just advancing the state of crypto, not only the US, but in the world. And it is a really important tool for JTX and Solana to have these high quality crypto assets that anyone in the world can access. I would say on that front, a much more niche ruling was made actually about a month ago that relates specifically to ETFs. And it enables the existing Solana ETFs, as well as new ones, to deploy up to 15% of their AUM into LSTs like JitoSOL. We actually published a blog post about this 2 weeks ago that explains how the dynamics work. We are actively talking to issuers of all of the existing and kind of potential pending ETFs in Solana, because 15% of the total Solana US ETF AUM is a very substantial amount, and obviously it could grow from there. So it is not moving as fast as we would have hoped, but we also kind of know the institutional landscape just doesn't move as fast as the crypto native world does. We recognized that when we started to invest in this space 18 months ago. But the TAM is enormous, which is why it makes sense. And frankly, we don't see other Solana staking providers playing this game. It's kind of another benefit of us with a long-term time horizon that we are willing to engage in an 18-month process to get JitoSOL in ETFs when others probably don't have the time horizon to do that. So I would say more generally, bigger picture on distribution. I talked about JTX and Coinbase earlier. That is an important pairing with the institutional stuff that moves on a multi-year time horizon, because JTX could be a huge amount of TVL in a 6-month time horizon. And so our focus right now is getting in every distribution channel possible, whether it's one of our parents that wants Solana exposure in their brokerage account, and ideally that is powered by JitoSOL, or whether it is us trading on JTX, or our friends that still have Coinbase accounts. JitoSOL should be everywhere they are, and it should be the preferred staking option because it is the best staking option on Solana. So we're pushing every lever we can to position JitoSOL to be front and center for potential people that are Solana users.
Perfect. Playing the distribution game nicely, it seems. And now back to you, Lucas, on JTX. What's the sequencing from here on perps via Phoenix and prediction markets potentially via World? I guess, how do you view the value JTX adds on top of these already existing infrastructure players?
Yeah, we are super focused on winning spot right now. There's so many example case studies of projects that spread themselves too thin. They try to do everything they can and they just end up not achieving product market fit in any single vertical. They just do everything mediocre. And it's kind of a joke, like Brian's the no guy at Jito. Like I'm coming up with all these ideas. Brian's like, no, we got to stay focused. I've kind of like learned to release the work, like Bezos said. And so, yeah, we are fully bought in on spot. We're going to win spot. Our priority for the next 2 months is just making the best trading spot experience possible. And we're shipping an update later today. Maybe it already went out on this call, as a lot of new features. We're really focused on going from 20 clicks to onboarding to 5 clicks. And yeah, all the other advanced order types as well. Earlier this year, we said we would ship Phoenix in the fall. We are still on timeline to do that. They've been dominating the last month. We expect this can continue into the fall and into next year. I think we will be able to help them grow even more. And the goal for JTX is to be able to trade any market in the world. So this is prediction markets, perps, spot, compute markets, all these crazy things. And so I think that by onboarding them, we will be able to help them grow and bring them more volume. And you'll be able to use all the same order types that we built for our spot experience in those new markets.
Perfect. Yeah, bringing those order types to perps will definitely be interesting. And now finally moving on to Q&A on the next slide, where we'll stay on JTX first. So JTX opened publicly on July 21st. How do you view JTX's, current usage, trading volume, and repeat activity so far? And what are some potential volume catalysts from here?
Yeah, I think JTX usage is in line with our expectations for the stage. This is not going to be an overnight success. Nothing Jito has done is an overnight success. I think from the outside, it might be easy to view it like that, but there's just so much work and so much strategy that goes into this. And we are okay not being an overnight success. We've won loyalty from some serious traders already, and those traders are using our advanced order types that you can't get anywhere else. So TWAPs, smart fills mainly. And so, yeah, some numbers. We've had multiple 7 and 8 figure TWAPs and smart fills in the last 48 hours. People buying Solana, Pump, and other meme coins. There's around $14 million deposited into JTX right now. And actually yesterday, it was the 4th largest trading terminal by volume on Solana. We also generated more fees on JTX in the past 2 days than all of our other products combined. And so we're seeing really successful, adoption of JTX for the stage. I would say our market share with more general retail participants is still low. I think it's a combination of like earlier stage product. It's not 100% polished like some of these products that have been out on the market for years. And there's still a lot of catching up to do to get to that 100% polished, focusing a lot on like meme coin features, explore page. Our retention numbers are pretty strong. I would say there's a lot of stuff to do on our conversion funnel. So, and just general onboarding experience. Our kind of mindset right now is just like there's 100 small things to improve, and we really need to focus on that as opposed to like any single large change. It's like top of funnel, easier onboarding, getting people to trade in 5 clicks, like better call to action, better on ramping, better order types, like fixing bugs. There's just a ton of stuff to do that's just like nitty gritty product details. And we're having a lot of fun doing it. We haven't really done this before as an infrastructure company. So we're kind of using a different part of our brain to really focus on this. And I'm confident we're going to be able to pull it off. I would say in general, like consumer behavior is very hard to change. And so that's something that we think about a lot. What is going to give people a reason to use JTX? And we're going to invest heavily in marketing and other ways to bring more people onto the platform over the next few months with all these bug fixes and then outreach and all that.
Perfect. And now onto the second question, also on JTX. So currently JTX leverages the existing spot liquidity on Solana. As the product matures, do you envision adding proprietary products that supplement Solana's general stack? For instance, exclusive liquidity providers, unique leverage systems, or other features?
I think Solana spot liquidity is super great right now. You guys have been putting out tweets from Blockworks on people trading SpaceX and the spreads that they're getting compared to other exchanges. We see better pricing on Sol USDC and many other assets. I feel like this hasn't really broken out of the crypto Twitter bubble. And this is one of the reasons why we made Good Trade. So if you trade an asset that's available on a centralized exchange, we will show you how much money you saved at that time. And we're seeing that users save a lot of money. So yeah, I guess within the last 24 hours, someone did a $10 million USDC to Sol swap, and they saved around $4,000 in execution costs. I think moving forward, as I mentioned earlier, we are focused on launching a true MVP, and that's using a lot of what exists off the shelf today and piecing it in a way that no one else has pieced it together before. But there's a lot of opportunity to build custom things in JTX. So proprietary liquidity, more advanced features, working with prop AMMs to detect JTX flow and have them quote tighter because they know it's not toxic, and even cooler order types. There's just a ton of stuff that we can do here on JTX and make it the best place to trade in all of crypto. And there's a lot of really cool and interesting monetization ways to have that value flow back to the Jito network. And yeah, we're kicking off some new projects in Jito that are focused in this area, and you'll kind of see that start to drip out over the next few months. But there's a lot of opportunity here.
Now back to the infrastructure side of things on our third Q&A question. When does BAM adoption start converting into fees? And when does the plugin pipeline look like beyond Makeup Priority?
Yeah, I can't comment on when we start converting into fees. I would say right now we're in growth mode. So we want to prove the technology. We want to grow it. We're okay waiting on fees. As far as the plugin pipeline, I would say the next big thing is BAM time. So just providing more granular access to time progression for market makers. This lets them quote tighter, bring more liquidity on chain, and ultimately, as I mentioned earlier, we're focused on apps and users. So users will get better pricing. Another thing that we're rolling out right now that's in early testing is pre-comps. There's some opportunity to capture value here that will be passed back to the Jito network. It's going to increase Jito tips. And then, yeah, I would say there's as I mentioned earlier, like there's a ton of ideas that we have. It's just choosing the best ideas at the time. And so, we're kind of wrapping up this pre-conf rollout, and we're going to go back to the drawing board and figure out what's the next highest value thing that we can build for Solana for applications and users.
Nice. And to close on a broader note, which recent Solana developments from new SAMDs to ecosystem products and infrastructure are you most excited about?
Yeah, it's a good question. I would say there's probably two big SIMDs that we've been tracking. So the first one is SIMD 550. And what this does is it doubles the rate of disinflation. And inflation, you can think of it as a leaky bucket. So people are getting paid out staking rewards. Depending on how you think about taxes, you'll probably have to pay taxes on those. And so people are selling SOL to cover those taxes. And so by slowing down this inflation rate, we can reduce the sell pressure on Solana, and it partially, patches the leaky bucket. I think another interesting one is resource fees. So burning SOL based on the resources used on the cluster. This is super important today. Validators get paid the priority fees for the transactions that get processed, but there's not an equivalent burn for how many resources those transactions use. And the entire cluster is impacted by block producers processing transactions because they need to replay them. So this resource fee, it essentially burns the SOL that's used and adds an additional fee onto the transactions. There's a bunch of other stuff going on core, like slot time reduction. So I think within the next 24 hours, we'll go from 450 milliseconds to 350 milliseconds. Today, testnet's already running 200 milliseconds. I think I tweeted about this last night. So if you go to Buffalo Twitter and there's a video on there, you can see the difference between what mainnet's running today and what testnet's running, just to give you like some visual representation of 400 versus 200. The slot time reduction is really good. Of course, Alpenglow is coming out. In the Jito world, I would say JIP-38. Outside of Jito, I would say like more apps coming onto Solana, more assets coming onto Solana that you can't trade anywhere else. I would say like World, other unannounced protocols, making new categories of assets to trade. I think the most important thing for Solana is getting really good applications into the hands of users that want to use the network. Maybe they don't even realize that they're using the network behind the scenes. So like JTX, FOMO, Pump, there's a ton of apps that are just killing it right now. This is going to be super important for the growth of Solana. And we just need to get more people trading on Solana. There's been a lot of progress that's been made here over the past 12 months. And I think the next 12 to 24 months are just going to be huge for Solana.
Perfect. So that ends our presentation today. Thanks to Lucas and Brian for walking us through the quarter, and to everyone who joins. The full Q2 report and all underlying data are available in the data room on Jito's IR page on Blockworks, free at jito.blockworks.com. And be sure to check out blockworks.com for other quarterly reports and to register for upcoming protocol calls. Thank you, everyone.
Thanks for having us, Sam, and thanks everyone for tuning in.